I'll call our work session to order. Agenda item number 1 is ordinance number 1791, an ordinance to amend the City of Laurel Employee Retirement Plan to stipulate that the mortality table and interest rate from IRS Code 417 apply to IRS Code 415. Mr. Green.
We have with us this evening the attorney for the Board of Trustees, who is, I will yield to her.
Thank you. Is this on?
Yes.
Okay. Thank you for allowing me to come and for putting us on the agenda. The purpose of this amendment is to... Is it okay? Are we okay? It's okay.
Sorry. No, go ahead.
So the purpose of this amendment is to change the plan before we do a determination letter filing, which will be happening later this week. And the way that the tax law works is there are limits on how much you can award someone in a retirement plan. So you couldn't just say, we're going to have a retirement plan that will give you $1 million a month. I know that's extreme, but that's an example. So the limits say that you can't operate a defined benefit plan to give someone a benefit which is above, right now it's $200,000 a year. We don't come near that because we're a governmental plan. It's based on our final average pay. Okay. Because you are a governmental plan, you have relaxed rules in some of these technical code sections that apply to you. You are still subject to the tax law limit. And I just told you we're not gonna bump up against it. It's not a problem, but we still have to have it in the plan. Your plan provides that if a participant has a benefit which is $5,000 or less, so if the monthly payment to the participant, when you present value it back, it's $5,000 or less, we can pay that person a lump sum payment. Under the tax laws, they want us to take that lump sum payment, they want us to pretend it's an annuity, and they want us to evaluate that annuity payment against the tax law limit. Again, we are not going to bump up against it. When we take that lump sum payment and we convert it to an annuity, the tax code wants us to use certain mortality tables and interest rates. Now, those mortality tables and interest rates apply to a private sector plan. You are a government, so you have relaxed rules. But for purposes of the limits, the IRS wants us to say that when we do the computation of the lump sum, and we convert it to an annuity, we use the interest rate and the mortality factors that would apply if we were a private employer. This will not impact anybody's benefit. It will not cause anyone to receive less money. It is a technical rule that we need to have in the plan. And I'm recommending that we put it in the plan because we are applying for an updated determination letter, and I don't want a technicality to be raised by anyone who reviews our plan. So it's my request that you please consider putting this in on an expedited basis so we can have it in the plan before we submit the plan to the IRS later this week.
Okay. Thank you. I think I have it. Mike, you want to add anything?
The next ordinance is the same for the other city plan.
Okay. So we can discuss them both together. Council, I'll start with Councilwoman Kirby with any questions or comments?
I understand, and I'm fine with this.
Great. Councilman Ricks?
I have done, sir.
Councilman Les?
Mike, thanks for sending me the December, I guess the December is the definitive plan,
That
correct?
was the most recent restatement.
Okay, so I was able to go and make sure this thing fit in here. Not that I don't trust you,
That's okay. I understand, yes, sir.
but I have this mind that sort of, and that said, I'm fine with this, Mr. President.
Councilwoman Nicholas?
Fine with it.
Okay, so this is agenda items both 1 and 2 that we're talking about. Okay, great. We'll now move to agenda item 3, ordinance number 1793, an ordinance to amend the City of Laurel Employee Retirement Plan to provide technical amendments required by the IRS for the 2013 determination letter. Mr. Green?
I will again waive, or yield to Marika.
Okay.
Thank you.
Marika?
This is an amendment that is being required by the IRS agent who issued our last determination letter. The IRS operates so that you apply for an updated determination letter every 5 years. And when you apply for the determination letter, they evaluate your plan, and they want to see all of the amendments you've made during that 5-year period. So we applied for a determination letter in January of 2009. And it took the IRS 4 years and 10 months to review our plan and issue our determination letter. And we are one of the few governmental plans who have successfully gotten a determination letter. There's a lot of confusion with the rules that apply to governmental plans, so a lot of the governmental plans are in limbo right now, sitting at the service, which means they've got the first determination letter application, and they've got a second one coming in that's sort of going to lap the first one. But we got our determination letter, and now we're going in for a new one for the next 5-year period. In order for us to get our determination letter, which was issued in November of 2013, the IRS agent reviewed with great detail our amendments that we submitted, and he requested that we make certain specific changes. And the changes that he made were technical changes. So I didn't see the need to argue or to say we don't have to make these changes. The changes that he wanted would not impact anyone's benefits. They were specific technical amendments to the plan, and I'm happy to walk you through the 7 amendments in big picture so you get comfortable that the amendments that he requested are amendments to bring the plan into literal compliance with certain tax law rules, but do not negatively impact the participant.
Okay, before you go on, let me just ask counsel, would you like further detail, or are we okay?
I'm fine with
Okay,
the fact
okay.
Mike's walked through it. And
Again, Mr. President, I walked through these because I had both the plans. Again, thanks a lot for sending me
Okay,
that,
okay.
Mike.
Just want to see if we'd save some time. Please.
All right, so then, thank you. So there are 7 amendments.
No, you're saying that you don't need the.
Oh, you don't, okay, I'm sorry.
No, we don't need it.
Okay.
If you're done,
Yes, sir, I am.
okay.
Just a reminder that the first 2 were seeking suspension of the rules for adoption tonight, and the other 2 can wait, or not.
Or we can suspend the rules
Or
for
vote
all
All
these.
3, and that's what I was
Have
going
to
to
do all
cover.
4, but we
Yeah.
only need it for the 2.
For the, okay.
just a point of clarification, when we do this, do you want to lump them together, or you want to do them individually?
I think we'd need to do them individually.
Okay, thank you.
For the record, okay?
Shaking his head, yes.
And our attorney agrees. So we'll start with any questions or comments, starting with Councilman Les,
None.
Councilwoman Nicholas, Councilman Ricks,
None.
and Councilwoman Crary.
None.
So again, as stated, council, with agreement to present these at our council meeting tonight, will be asked to suspend the rules on items 1 and 2.
3 and 4.
3 and 4, no.
We do 3.
No, we can discuss
1, 2,
those.
3.
Yeah, just 1 and 2.
Okay. What do you want, Mike?
1 and 2 is all we need. 3
Okay.
and 4 is fine, we will be glad to take them, but we need 1 and 2 adopted and signed tonight.
I just want to get them all out way.
Yeah, council, so let's just go ahead and take the whole bundle.
We have to take them individually, but.
That's the way I
Yes, yes, that's what I mean. That's what I mean. Yeah.
Good.
Mr. Manzi, that okay with you? That's fine. Excellent, okay. So, perfect. So we will then, we're in agreement, I haven't gone to agenda item 4 yet, but for 1, 2, and 3 at least, we know at this point.
I'm sorry, but 4 is just a repeat of 3. for the
Okay,
other plan.
then that takes care of it. 1, 2, 3, 4.
Okay,
Thank you.
thank you.
And now, what we've all been waiting for. Agenda item 5 is a review of the FY 2013 financial statement by Lindsey and Associates LLC. Michelle? Good evening.
Good evening, Mr. President. Our auditors, Lindsey and Associates, are here to present the FY 2013 financial audit of the City of Laurel. Here with us is Mr. Bob Diss and Mr. Jim Lindsey, and they'll be making the presentation.
Thank you. Gentlemen, good evening.
Okay. Good evening. Thank you, ladies and gentlemen. My name is Bob Diss with Lindsey and Associates, and as Michelle has pointed out, we've completed the audit for June 30th, 2013, and it was filed, as you can probably see, October 30th on time, along with the UFR. I'll just go through this, kind of hit the highlights. You can ask questions as we go along if you like, but I'm just going to give an overview of what we've got here, and hopefully you brought along your audits as the agenda says. Page 1 is the auditor's opinion letter. It goes on for 3 pages now. If you were keeping score from last year, you see it's changed just a little bit. The intent is still the same in that we give reasonable assurance that these financial statements are not materially misstated. They've added some headings on all the paragraphs, but it's essentially the same thing. Starting on page 4, going through, I don't know, probably page 10 or 11 or something like that, is the management's discussion and analysis, page 11. The management's discussion and analysis, that's written by the town, Michelle, maybe with other people, I don't know. And it just states, it puts in language what the town wants the reader to know, emphasizing the current year, meaning 2013, as compared to the prior year. The actual financial statements begin on page 12. Now, it's important to realize that you've got 2 sets of financial statements, or on 2 different bases of accounting. The first set, which I'll call a balance sheet and income statement, which is pages 12 and 13, they're on the full accrual basis of accounting. They take everything of the town into account, including capital assets, depreciation, expense, long-term debt, that sort of thing. The fund financial statements begin on page 14, and there again you've got a balance sheet and income statement. And those are only current assets and current liabilities. You won't see any capital assets or any long-term debt. And the differences between the two are found in a reconciliation over on the right side. Then you've got a fiduciary fund with the pension trust fund, which is not assets of the city, but you have fiduciary responsibility, so we include those, pages 16 and 17. The footnotes begin on page 18, and as always, footnote 1 is a summary of all the significant accounting policies, and it's largely going to be the same as last year. I'll point out we've implemented a couple of new GASB statements, 63 and 65. They changed the face of the statements a little bit. It's not called a statement of net assets anymore. It's now called the statement of net position. And you also, it's created this thing called deferred inflows and outflows of resources. And more or less, that's what deferred income, or deferred revenue used to be. Now they call it deferred inflows and outflows of resources. Point out a couple of other footnotes of interest. Your investments, for example, are in footnote 3 on page 31. There it shows your MLGIP, repurchase agreements, money markets, and CDs. Comes to just about $15 million there at June 30th. Also point out your capital assets are in note 10, page 35. Shows your beginning balance, then any increases, meaning capital outlays and depreciation expense, and then decreases, things you've either transferred out or disposed of, and you have an ending balance there. And it shows the depreciation expense that we calculated by department there at the bottom. Your long-term debt is laid out paragraph by paragraph on note 11, starting on page 36. And there on page 37 is a summary. At June 30th, there was approximately $10.5 million of long-term debt, and additional for compensated absences and OPEB liability. Your year-by-year payments are on the next page, broken out by bank loans, CDA loans, and then the total. Other items of note, maybe in the back, we'll look at the budget to actual. Required supplementary information required to show original budget and final budget. Compare that to the actual and then show the variance on page 52. And it's broken out more of a almost line by line beginning then on page 53. Goes revenues for I think 3 pages, and then all your expenditures. We've also issued a couple of other reports here. One of them is a report on internal control, and it's a good report, meaning we didn't come up with any material weaknesses, so yay, Michelle. Yay, Laurel. So that's good. Also, we've got the letter, which just relays some things in writing that we used to just say verbally. It talks about what standards we use. We use generally accepted auditing standards and government auditing standards. The scope of the audit didn't change. We didn't have any particular difficulties performing the audit. We didn't have any significant adjusting journal entries. We had found no fraud, had no disagreements with management, that sort of thing. Thank you.
Mr. Lindsey?
I don't have any comments.
Okay. Council, I'll open it up for questions and comments. I'll start with Councilman Ricks.
I think the report shows, as it did the last 2 previous years that I've been on the council, that the city is run very, very efficiently, and congratulations, Michelle, once again, for doing a very, very good job. I think that we are very prudent in how we spend our money. I think that we get the biggest bang for our buck, and I think that under Mayor Moe and administration, I congratulate you all on helping us make good and look good, is what I meant to say. And so with that, there are my comments. Thank you.
Thank you, Councilman Ricks. Councilwoman McCrary?
Thank you, Mr. President. Page 33, just a clarification. Speed camera fund, those won't be considered receivables, they'd be payables?
It's probably, let me think about this, it's payable over to the general fund. Let me go back. Show that fund separately. Just a moment. Speed camera fund. So right there, due to other fund. Yeah, let me see. That number correlates, if you look back on page 14, it has a due to, and it's probably due to the general fund, I'm guessing. Due to other funds, 606. So that means that the general fund has, for that moment in time, paid something, some expense of that fund, and so that fund owes the general fund. It's not, it doesn't have to do with tickets receivable or anything like that.
Thank you. That's all.
Councilwoman Nicholas?
Page 54. Red light camera tickets.
54, there we are.
So can you explain those 4 columns to me?
Well, sure. Well, the first 2 are your budget. You apparently didn't change the budget. Now, one thing, and then you've got the actual column, that's the actual total amount, and that's the gross amount of tickets that came in. It's possible, I don't know, you might budget the net number, because when you get a red light camera, you probably have to pay like 40% to OptiTraffic or something in that ballpark. And a lot of towns, I don't know off the top of my head if Laurel does, but they will only budget the net number, and we have to show the gross number.
No, we budget the gross
You do, okay.
receipts on the revenue side, and then have offsetting expenditures in the police
Okay.
department budget.
So you simply got in a good deal more than you had budgeted.
Thank you.
Councilman Les?
Will we ever be done with Gatsby statements?
Say that again?
Will we ever be done with Gatsby statements
When we retire, we'll be done with them.
when we retire? I mean, what are we up to, 70 now in this report? And I'm not criticizing. It would seem
Yeah.
to me that the accounting standards people should be able to sort of, hammer down something that in fact is definitive, so we don't have to keep paying attention to all these new ones every year.
They're
I'm not
bureaucrats, Mike.
Huh?
They're bureaucrats, too. That's why it changes.
Are you reflecting on my employer?
Yeah. You take it any way you want.
But again, I find it mean, I don't know what the burden is on the different municipalities and the accounting firms to have to adhere to all these GASB statements. But it's like somebody's just churning it to make business.
It is something you have to keep up with. In fact, a lot of firms stopped doing governmental audits because of that.
Right, I know that. We've got GAP and we've got GASB, and I just, geez. Okay, again, I appreciate what you presented here. When I looked at this earlier, I didn't look at all the numbers, but I looked at the highlights. I have a couple of area concerns, but it's not for this discussion at this point. Thank you, Mr. President.
Thank you, Councilman Les. I'm just going to say that I agree with Councilman Rick's initial comments about the outstanding work that Michelle and her department does. But I think it also should be said that our department heads also play a major role in how well our finances are managed also. So I think all around, department heads, staff, and our finance department have shined and continue to shine annually. Mayor Mo, any comments?
Yeah, I just, on note 13, when we talk about risk management on page 38, I'm looking at the general statement talking about exposure, those types of things. My question was, and we've tried to do some things internally here, and you've noted that, is there other ways to help us, or from a municipal standpoint, reduce our risk management, our liability, those types of things that you may have or discovered or other cities may be doing that we're not? Take that back with you. I don't need an answer.
I really just need to ponder that.
Yeah,
so
I would appreciate responding back to us on that.
we will.
We've tried to do some things and make some changes and put some things in place to help with that. But I was just curious if you all, in your travels, have seen other things. So I'd appreciate you getting back to me on that.
Okay.
The other thing is, since Marika's here, you talk about page 40 on the pension plans. Do you all, does this come from, where's Mike? Does this come from you all, this language, Michelle? I guess my question is, do you all look at this as well, from the audit standpoint of their comments? Marika? No. Do you think you should?
Most of this language is dictated by the Governmental Accounting Standards Board.
Okay.
Most of the language in there. So,
And the information that's provided within comes from the most recent actuarial.
That was, okay, that's what I couldn't,
evaluation,
okay.
Yes.
All right. I would suggest we make sure that that at least that section, Mike, and then pass that on as well. Excuse me. That's all. Thank you all, and I want to thank the council. We appreciate the accolades for Michelle and her staff. But again, we couldn't do it. We can't spend it without council appropriating and checking on us and keeping the checks and balance. So it's a team effort. We want to thank you. So thank you all for coming tonight. Thank you, Michelle.
Thank you.
Thank you, Mr. President.
thank you very much.
That concludes our work session agenda. Is there any other business? If none, we'll adjourn until our regular meeting at 7 p.m.